Hi everyone, my name is Toby Thorne. I'm a Senior Manager in our VAT team at James Cooper Creston. This is the next instalment of our Tax in 10 series, with this being the first of a number of videos covering various hot topics in VAT. In this video, I will be covering the e-commerce VAT changes coming into effect from the 1st of July 2021, commonly referred to as the EU VAT e-commerce package. However, these changes can be utilised by businesses outside of the EU, including the UK. As I've already mentioned, these changes come into effect from the 1st of July 2021 and apply to any business that sells B2C goods or services to customers located in the EU. This new package will significantly alter how VAT is applied to intra-EU B2C supplies of goods, as well as imports of low-value goods. It will introduce new methods of accounting for the VAT due on such supplies by extending the existing Mini One-Stop Shop, or MOS scheme, into a much wider ranging scheme. These sweeping reforms, being adopted by all 27 member states of the EU, consist of four key components. Import One-Stop Shop, for low-value goods being imported into the EU. The One-Stop Shop, for intra-EU B2C deliveries of goods and for intra-EU services provided B2C by EU-established suppliers. The non-union One-Stop Shop, for businesses established outside of the EU and replaces and extends the current non-union MOS scheme. And finally, the marketplace deemed VAT supplier rules. These are special provisions for online marketplace platforms whereby such operators will be referred to as the deemed supplier and will be liable to collect, report and remit the VAT due from the end consumer. I will now review each of these changes in a little more detail for you. Firstly, IOS. The EU is removing the VAT exemption for the importation of goods not exceeding €22, also known as the low-value consignment relief. From the 1st of July 2021, all goods imported into the EU will be subject to VAT. IOS is an electronic portal suppliers and marketplaces selling imported goods to buyers in the EU can use to collect, declare and pay the VAT to the relevant tax authorities. This is instead of making the buyer pay the VAT at the moment the goods are imported into the EU, which is an option at the moment. IOS should help to create a more efficient, fast track and easy customs clearance. However, there has already been one stumbling block for this scheme in that to register, businesses must appoint an intermediary accountant based in the EU, also known as a fiscal rep, to act for them. This is an extra cost for the UK seller, and many EU accountants are reluctant to carry out this role because they are liable for any outstanding VAT returns and payments of the non-EU business. And finally, sellers and marketplaces may still opt instead to use the special arrangement rules and have postal agents and customs agents collect the import VAT on consignments not exceeding €150. Next is OS. So also from the 1st of July 2021, the EU is abolishing the distance selling thresholds, replacing them with a new EU-wide threshold of €10,000. Businesses trading below this threshold can continue to apply the domestic rules for VAT on cross-border sales. However, if sales exceed this threshold, businesses are liable for VAT in the member states where the buyers are located. OS is again an electronic portal businesses can use to comply with their VAT obligations on these B2C e-commerce sales within the EU. This portal can be used by businesses that are established in the EU and can be used to report VAT on both intra-community distance sales and non-domestic sales of services to EU consumers. It could also be used by businesses established outside of the EU, but only for the purposes of reporting intra-community distance sales of goods. One final point to note is that sellers holding stocks in warehouses in other EU states will still have to remain foreign VAT registered following these July 2021 reforms. This includes using the Fulfillment by Amazon programme. There will, however, be exceptions for sellers using marketplace facilitators, which I will cover shortly. So next is non-union OS, which is an extension of the current non-union MOS scheme. It is exclusively for online sellers not established in the EU to report VAT on sales of services to EU customers only. And if your business is already registered for non-union MOS, your registration will automatically be migrated over to the new OS scheme. And then finally, marketplace VAT deemed supplier rules. So the new rules mean that so-called electronic interface marketplaces and platforms, such as Amazon and eBay, will become the deemed supplier for VAT purposes in certain cases when distance selling to EU consumers. Deemed supplier rules remove the need for sellers who use the marketplaces to account for VAT at the point of sale. Effectively, it's as if each consumer purchase process means they sell the goods to the online marketplace, who then sell the goods to the consumer and account for the VAT while doing so. So it's this two-stage VAT transaction going on. So I thought I'd just give some examples for businesses established outside of the EU of intra-EU supplies and which of the new rules could be applied to them. So sale of goods from outside the EU direct to customers in the EU. So IOS registration could apply here if the goods are of a consignment value less than 150 euros. Sale of goods from outside the EU via a platform to customers in the EU. So the new marketplace rules will apply for qualifying deliveries. So sale of goods originating in the EU direct to customers in the EU. So this is then going to be OS and at least one local VAT registration. And then finally, sale of goods originating in the EU via a platform to customers in the EU. Again, the new marketplace rules are going to apply if they are qualifying deliveries. It is entirely possible that a business that's not established in the EU might register for OS, non-union OS, and IOS, sort of depending on the business. So it's not just a case of you can only have one. It could be a case that you had all three of these registrations ongoing at once. And then finally, sort of like, is OS right for your business? There are a number of things you need to consider. The first one I've put there is cost. A single OS registration versus a number of multiple EU VAT registrations, potentially. A single OS submission going forward versus multiple VAT return submissions. Do you need to appoint a fiscal rep, and is there an additional cost for this? EU VAT recovery as well. So the OS schemes do not allow you to recover VAT on any costs. So if you are incurring VAT in the EU, you need to compare this potential VAT loss to the cost saving of having just a single registration and submission per quarter. Other considerations are whether your systems can cope with the new record keeping requirements, and is there any risk of errors being reported to the to your OS or IOS reports, and if there is any impact on other EU reporting obligations. This list is by no means exhaustive, and of course each business is different, and you need to consider factors specific to your business before making any changes. Thank you very much for listening. I appreciate that was quite a lot of information to take in a short space of time. Please do get in touch if you have any questions or are unsure of if IOS or OS is right for your business. My contact details are on screen now. Also, keep an eye out for our next Tax in 10 episode due to be released shortly. Thank you and goodbye.